They told us money makes the world go round. But what if that world was built on an illusion? An illusion so powerful that even when it collapses, the people who created it walk away richer. When banks fail, economies fall, and citizens lose everything, why do the same few always seem untouchable? This isn't an accident. It's a design. And today we're pulling back the curtain on the banking illusion that made the rich untouchable. Section 1. The illusion begins. 0:45 to 2:30, every story has a beginning. And this one starts not with money, but with trust. Centuries ago, gold was money. Simple, finite, heavy. Merchants needed a safer way to trade without carrying tons of metal. So goldsmiths' keepers of vaults offered receipts for stored gold. These paper notes could be exchanged for goods, backed by the promise of gold. But somewhere in the shadows, a dangerous idea was born. What if you printed more receipts than the gold you actually had? Just like that, fractional reserve banking was created. A system where banks could lend money they didn't truly own. Money that existed only as numbers, backed by faith and fear. The illusion was complete. Wealth could now be manufactured. Section 2. The rise of the money magicians. 2:30 to 5 o'clock, fast forward to the 17th century. England was drowning in war debts, desperate for a new financial engine. In 1694, the Bank of England was born. A private institution granted the power to issue money to the crown. In exchange for perpetual debt, it was a deal that changed history. The state gained endless funding. The bankers gained control of the money supply. From that moment, the real rulers weren't kings or parliaments, they were those who controlled credit. The pattern spread like wildfire. France, the Netherlands, America, each nation fell for the same promise: prosperity through debt. And yet, behind every boom came a crash. Every crash, a bailout. And every bailout, another step in the quiet transfer of power from governments to private financiers. Section 3. The turning point. The Federal Reserve. 5 o'clock to 8 o'clock. By the early 20th century, the illusion had become an art form. Banking dynasties Rothschild, Morgan, Rockefeller were the invisible hand shaping policy, markets, even wars. In 1910, on a secluded island called Jekyll Island, a group of bankers and politicians met in secret. Their goal, to build a central banking system that would stabilize the economy but really would consolidate control. 3 years later, in 1913, the Federal Reserve was born. To the public, it sounded like a government agency. But in truth, it was a private cartel of banks with the exclusive power to create US money and charge interest on it. Every loan issued was a promise of future labor, and every economic solution was another layer in the illusion. Section 4. When money lost its soul. 8 o'clock to 11 o'clock for decades. The illusion held strong, as long as people believed that their paper was backed by gold. But in 1971, that final link was severed. President Richard Nixon ended the gold standard, turning the US dollar into pure fiat. Money created from nothing by decree. In one speech, he transformed money from a store of value into a system of control. Now, whenever the government needed money, it simply borrowed it from the same institutions that printed it. Debt exploded. By the 1980s, banks realized the illusion could go further. They began financializing everything: housing, education, healthcare, even water, turning basic human needs into tradable assets. The system no longer served people, it served balance sheets. Section 5. The breaking point. 11 o'clock to 14 o'clock. It came 2008. The world watched as major banks collapsed under their own lies. Subprime mortgages, toxic assets, endless speculation. The system had consumed itself. And yet those responsible weren't punished. They were rescued. Governments printed trillions to save private banks. Ordinary people lost homes, jobs, futures. The rich, they gained even more control. It was the purest form of the illusion. Privatize the profits, socialize the losses. Even after the crisis, nothing changed. If anything, the illusion deepened. Markets soared, wealth inequality exploded, and ordinary citizens drowned in debt, created by the very system that promised to protect them. Section 6. Modern Parallels and Shocking Truths. 14 o'clock to 18 o'clock. Today the illusion is digital. Money isn't printed, it's typed. With a few keystrokes, central banks conjure trillions. Global debt now exceeds $320 trillion, more than 3 times the world's total economic output. And yet governments still borrow, banks still profit, and the illusion still holds. Every crash leads to the same outcome. The rich consolidate power, the poor lose ownership. And the middle class becomes the buffer, a psychological cushion for an unsustainable system. The pattern is mathematical. The debt grows faster than the money to pay it, which means collapse isn't a possibility, it's a mathematical certainty. And now a new layer is emerging. Central bank digital currencies, CBDCs. Digital money that can be tracked, controlled, even shut off. Once again, the illusion is being updated for the modern age, and once again, it's sold as progress. Section 7. The Failed Fixes. 18 o'clock to 20 o'clock. Every solution the world has tried only deepens the illusion. Regulations, they're written by the same people they're meant to restrain. Stimulus packages, more debt, inflation control, temporary manipulation of symptoms, not causes. Politicians talk about reform, but they're bound by the same invisible chains: campaign donations, lobbyists, central bank dependencies. Because you can't fix a system that was never designed to serve the people, it was designed to serve the lenders. Section 8, the takeaways and final warning, 20 o'clock to 22 o'clock. Takeaway number 1. Money is no longer a measure of value, it's a tool of control. Those who issue it decide who prospers and who suffers. Takeaway number 2, debt isn't a Flotsi engine. Without it, the entire illusion collapses. That's why they'll never let it end. Takeaway number 3, wealth doesn't disappear in crisis IT transfers. Every crash, every bailout, every rescue is a reallocation from the many to the few. The illusion survives because we keep believing it, because the alternative, realizing money as a human construct, is too terrifying to face. But here's the truth. Every illusion only lasts as long as the audience keeps watching. And this one, it's starting to crack. ytvideo call to action, 22 o'clock to 23 o'clock. If this story opened your eyes, don't look away.
The system really works.
Share this video before the next illusion begins, because the only way to break a spell is to see it for what it truly is. This is the banking illusion, the system that made the rich untouchable. And now you know it's